I'd like to first welcome Ms. Sheila Bashiri.
Good evening, everyone. Thank you for joining us tonight. Hopefully, you will be able to get some good information out of this session. The purpose of this tax credit workshop is to help those who have not applied for a tax credit previously and who live in a historic district or a historic building. And also to give information on the state tax credit, because that's one that it's available to people that live in national registered districts. And so a lot of people haven't tried before to apply for this tax credit, and this is a good opportunity to learn how and learn the basics of what you need to do in order to get it. And then with the local tax credit, with Montgomery County tax credit, every year we have several, but not nearly enough, not nearly as many historic properties as we have. And I think people just aren't familiar with it enough. And so this is just a chance to learn more about it and have the opportunity to see if this is something you would like to do. When you have maintenance on the house, it's the best thing possible. So I'm going to go ahead and give just a short presentation on the benefits of being in a historic district. So I'm going to have to take down the agenda here in order to do that. I can't hear you, Chris.
And while Ms. Bashiri's switching over to her presentation, again, if anyone has any questions for our speakers tonight, make sure to go ahead and place those questions in the chat panel.
Okay, thank you for coming tonight. Just for a short minute, I want to talk about 10 benefits of local historic districts. So one, local historic districts protect the investments of owners and residents of historic properties. Insensitive or bad planning in developing in your neighborhood makes it less attractive to investors and to home buyers, and it also undermines your property value. So instead, historic district designation encourages people to buy and rehabilitate properties because they know their investment is protected over time. This is a house on West Jefferson that sat empty for many, many years. And when someone purchased it and restored it and did the landscaping and really made it so much more attractive, it's helping with the neighborhood itself, helping with the investment in your property in that neighborhood. Properties within local historic districts appreciate at rates greater than the local market overall, as well as faster than similar non-designated neighborhoods. Historic district designation is a proven community stabilizer. Recent studies have shown that historic districts nationwide have a higher resale value and increased property value that is comparable to properties in neighborhoods outside of designated historic districts. This is another house that sat empty for a long time and was recently restored. And it sits on a corner, it's very visible to everyone. 3, local historic districts encourage better quality design. Better design equals a greater sense of compatibility, more innovative use of materials, and greater public appeal, all of which are shown to occur more often within designated districts and non-designated ones. This particular building on the left was recently approved by the HDC as a new structure or infill in a historic district. And the historic district is right within the footprint of that little building. The building next door to it is not a historic district, but it's being developed as condos. And so the whole project is being made together. But directly behind the little building is 2 historic districts. So this building was designed to fit in with the historic district and with the building next to it, as opposed to not having any control of the design and having it stand out like a sore thumb amongst the community. Local historic districts help the environment. Historic districts encourage communities to retain and use their existing resources in established neighborhoods. This reduces the need for cars, cuts back on pollution and congestion, and eliminates landfill waste. This building is the Americana Center. It's actually where I'm at right now, where I live at. It was designated just a few years ago. It was built in 1970. It was one of the first buildings built during the urban renewal, and it's one of the last few standing as a result of buildings being torn down after urban renewal. But this building has received wonderful tax credits. because of all the work that they're doing on it, a lot of concrete work. And also it's right next door to the metro. There's a lot of people that don't use cars, they just go directly to the metro. So we're cutting down on pollution and congestion. And by not tearing it down when they tore down other buildings, it eliminates landfill waste. Local districts are energy efficient. Many older buildings are designed with energy conservation in mind, taking advantage of the natural light, cross ventilation, and climate appropriate materials. Preservation commissions are also increasingly improving their design guidelines to make it easier for historic building owners to use renewable energy technologies. We haven't had anyone ask for solar panels on the roof, but there are ways to actually do those things, to adapt for electric cars. And there's just one of those things you just have to ask, and we can find a way to make it happen. Historic districts are a vehicle for education. They are a tangible link to the past and a way to bring meaning to history and to people's lives. They preserve the original character of buildings and streets while welcoming growth and innovation within those spaces. They are a living, active record of communities and their residents. This is the B&O Railroad Station, and Rockville really started to grow once the stations came and trains started going through town, because they could actually travel from Rockville to DC to work. And so this is just part of the history and the story of Rockville. Local historic districts can positively impact the local economy through tourism. An aesthetically cohesive and well-promoted district can be a community's most important attraction. According to a 2009 report, 78% of all U.S. leisure travelers are cultural and or heritage travelers who spent on average $994 on their most recent trips, compared to $611 spent on non-cultural and heritage travelers. And you can imagine that since 2009, that amount has doubled. But there are people that love architecture, that love a certain type of building. There are people that travel to places to see farms like King Farm. Protecting local historic districts can enhance business recruitment and potential. Vibrant commercial cores and charming neighborhoods with character attract new business and quality industry. Companies continually relocate to communities that offer their workers a higher quality of life, which successful preservation programs and stable districts enhance. Local historic districts provide social and psychological benefits. People living in historic districts enjoy the comfort of a human scale environment, the opportunity to work and live in attractive surroundings, a recognizable and walkable neighborhood, and the galvanizing effect of community-based group action. Local historic districts give communities a voice in their future. By participating in the designation process, residents can guide the direction of their neighborhood, making transparent decisions together rather than behind closed doors or without public comment. It gives participants a sense of empowerment and confidence. And some of you may recognize this as may recognize this pond as a result of you're just recently designated as a National Register district. And I know a lot of you signed up and you want to know about the National Register tax credit. So just thought I would throw that in there. If anyone has questions for me, this is my contact information, and you can contact me anytime and I'd be happy to help you. Thank you. I would like to introduce our guest. First, we're going to have first we're going to have Dana Marks Halpert, Preservation Officer for Tax Credit Programs at Maryland Historical Trust, Maryland Department of Planning. And after she finishes her presentation, the Montgomery County Historic Preservation Tax Program will be discussed by Rebecca Ballo, Historic Preservation Supervisor on Montgomery County Planning Department. And following that, we will have question and answer session in the chat. So you can continue to just chat, and if you come up with questions while they're speaking, just put them in the chat and we will make sure that they get answered. Thank you.
Okay, well, good evening, everyone. Thank you for having me. I'm just gonna go ahead and put my slides up for everyone to see? Okay. I've never presented with an Adobe PDF through WebEx, so this is a fun new experience for me. If you have any questions or if something doesn't work, just let me know. But as Sheila mentioned, my name is Dana Marks Halpert. I am with the Maryland Historical Trust. I am one of 2 preservation officers we have on staff that our main job is to be a tax credit reviewer. So we help facilitate the Maryland Historic Revitalization Tax Credit Program, which is what these slides are really going to be focused on. That's the state historic tax credit we facilitate. It's a 20% state income tax credit. And there are opportunities for both commercial and residential properties. So I'll get into the details of those. What my slides don't cover, but I just want to mention briefly at the beginning, and we can focus on some questions if they pop up. We also work with the National Park Service to help facilitate the reviews for the Federal Historic Preservation Tax Credit. That is a federal income tax credit equal to 20% of rehabilitation expenses for usually larger scale commercial projects. So those do have to be on income producing properties. Unfortunately, as a homeowner or as a resident, you're only going to be able to take advantage of local and state tax credits. But we do also work with the Park Service to do those larger commercial projects that get a federal credit. So what exactly is the Maryland Historic Revitalization Tax Credit? In addition to being a little bit of a mouthful, pretty much it is the 20% state income tax credit you may have an opportunity to receive. If you fit into one of these 3 categories on the screen, we facilitate a competitive commercial tax credit, a small commercial tax credit, and a homeowner tax credit equal to 20%. The application process for all 3 of these types is pretty much the same. So I'll walk you through what would happen if you wanted to apply for the homeowner credit, but they all follow the same process, and depending on the type of building and its use, you could be eligible for one of these potentially. Okay. So the competitive commercial tax credit is, since it is competitive, this is the one branch of our program that has an application deadline every year of August 31st. It's typically available for larger income producing properties that meet a adjusted basis value threshold, which requires a little bit of math, but we do have some explanations online for that. Just like all of our state components of the tax credit, it is equal to 20% of eligible rehabilitation expenses. And these large competitive commercial projects can be capped at $5 million. So you can receive a 20% tax credit up to $5 million. A substantial rehabilitation project is a project that's going to have an adjusted basis value, or excuse me, it's going to be the cost of your project is going to be higher than the adjusted basis value, or $25,000, whichever. It has to meet whatever that threshold is. With it being a competitive statewide program, just to make it even more competitive, we only are able to offer 60% of the total available funds in one fiscal year to any county or municipality. So, for example, if one year we get a boatload of applications from Montgomery County, unfortunately, we would have to cap it at Montgomery County projects only receiving 60% of what we have available to fund that year. The small commercial project, while not available right now, I think is a great opportunity that property owners within Rockville or within Montgomery County may be able to take advantage of as soon as it comes back. This is available for smaller scale income producing properties or commercial properties. They need to be income producing. They could also be part of a development project where the developer is going to sell like individual units or townhomes to a homeowner at the end of the project. Or it can also be a targeted structure, which we would call an agricultural building or a post-World War II building. Like I said, these are smaller scale projects. Small commercial projects cannot exceed $500,000 in qualified rehabilitation expenses. So in my earlier slide, the competitive commercial projects are kind of in the upper hundreds of thousands of millions, but these small commercial projects are going to be those smaller scale Main Street buildings that have lower budgets. There's also the ability to get a little bit higher of a bump in tax credit if it's located within an opportunity zone. But in right at the top, I do say it's coming back next year. Right now, it's currently not available. However, starting on July 1st, 2023, there's going to be an annual pot of $2 million available every fiscal year for small commercial projects. So those will be available starting next summer. We will have information and announcements on our website as July 1st kind of gets closer and closer. So if you have specific questions about the small commercial project, I would love to hear them. And if you're interested, I can take down your contact information, or you can contact me about it. We can work together moving forward when it becomes available. But what a lot of you may be here for is our homeowner tax credit, which is available for owner-occupied primary or secondary residences that are going to undergo a rehabilitation project. And the minimum amount of expenses that you need in order to qualify for a homeowner project is $5,000 in eligible costs throughout a up to 24-month period of time. So the homeowner tax credit, like I said at the beginning, is going to equal 20% of the total eligible rehabilitation costs that you incur during a project. That's going to be taken against your state income taxes. And the homeowner tax credit is capped at $50,000 for a 2-year period of time. So for the first $250,000 you spend in a 2-year period, you'll be able to get back up to $50,000. A little bit different from our competitive commercial tax credit. For homeowner tax credits and also small commercial, we accept applications on a rolling basis. So once you submit us an application, right now, our review time is within 30 to 45 days. So within ideally a month, you will be able to get an answer back to us, whether or not your project has been approved. A little bit of fun numbers and data. To date, we have had over 4,200 homeowner tax credit projects approved with $65 million in tax credits returned back to homeowners. And within Rockville, we have had 52 projects, and these numbers are updated since last Friday. And Rockville homeowners have been able to receive almost $440,000 back in tax credits. So those are the three branches of the state tax credit that we offer. So moving forward in how to apply, what projects to consider for a state historic tax credit. These are just some key preservation terms you may hear thrown out throughout my presentation, perhaps throughout Rebecca's, and maybe in our Q&A discussion at the end. The National Register of Historic Places is the official list of the nation's historic places worthy of preservation. We manage that as the State Historic Preservation Office, along with the National Park Service. A National Register nomination is something that any National Register district or individual property has to prepare in order to be formally designated on the National Register. Some important elements of the National Register nomination form that we as tax credit reviewers look at is the period of significance, which defines the time period for which the district or individual property is significant. It could be a specific year, it could be a decade or a couple of years, it could also be centuries, depending on the history of the property or area. We also look at the statement of significance, which describes what makes a district or property significant. It's also where the preparer really makes a case for why this property is significant, why the district is significant, why it needs to be listed. In a historic district, oftentimes in newer and more recent nominations and listings, they also have a list of contributing and non-contributing resources, which is very helpful. And we also refer to this document a lot called the Secretary of the Interior's Standards for Rehabilitation. And those are 10 principles established by the Park Service that we use in our review to help us determine whether or not a rehabilitation project is going to be considered appropriate and meets the guidelines and ideas of what we deem an acceptable rehabilitation project rather than a remodeling project or reconstruction or just like a renovation that doesn't necessarily take into consideration the historic elements and characteristics of a property. So the Secretary's standards also come with guidelines for preserving rehabilitating, restoring, and reconstructing historic buildings. So there are 10 main principles and also very thick documents that give you lots of guidelines and examples of what to do and not do to historic building in order to meet those standards. But the 3 main takeaways are listed on the screen right now. Distinctive features that characterize a property must be preserved. When deteriorated beyond repair or missing, features should be replaced to match. And new construction and additions must be compatible, but differentiated from the historic structure. So if you're interested in undertaking a rehabilitation project, whether or not you want to do it for tax credits, these are the 3 main takeaways to try to plan a rehabilitation project that is going to meet the Secretary standards. So now I'm going to walk you through the application process, and we'll kind of put the goggles on in pretending that we're going to be preparing a homeowner tax credit application. Right now, our review times are about 30 to 45 days from when we receive a complete application, whether it's a Part 1, a Part 2, a Part 3, any portion of the tax credit application. So Part 1 and Part 2 need to be submitted, reviewed, and approved before you start your project. And the Part 3 would be submitted once your project is complete. So Part 1 certifies that a property is historic and eligible for the tax credit program. And in a little bit, I'll go over what those eligibility designations are. Part 1 certification is valid for 5 years. So if you submit a Part 1 now and don't get around to submitting a Part 2 for 2 or 3 years from now, that's okay. You'll still be valid as eligible for the program. There's also no application fee for the Part 1 application. Part 2 certifies that your proposed rehabilitation work meets the Secretary of the Interior standards for rehabilitation. There's a $10 review fee for homeowner and small commercial Part 2 applications, and then there's a larger fee for the competitive commercial Part 2 applications. So Part 1 and Part 2 need to be reviewed and approved ahead of time. It could be submitted at the same time or separately, depending on your project timeline and what you're able to prepare. Fast forward to the end of your project, once all of the rehabilitation work is complete, then you'll submit the Part 3, which will certify that the project was completed in accordance to what was approved in your Part 2. It'll also confirm to us that all of the work we originally approved in practice and once it's completed does still meet the Secretary's standards. We also certify all of your eligible expenses. There's an additional review fee associated with the Part 3 application, which is basically equal to 3% of your tax credit minus the original application fee of $10. So if you are doing your calculations and you find out you're going to get a $1,000 credit, your final review fee will be $30 minus the $10 initial fee. So now I'm going to go into a little bit of detail about each of those application parts. So Part 1 is the historic certification. They need to be certified at the Part 1 level in order to be eligible for the tax credit. And your property needs to meet one of the following designations. It needs to be either individually listed on the National Register. It needs to be a contributing resource within a historic district that is listed on the National Register. Or it could be a local individual listing or a local historic district. So for you all in Rockville, I know you have a combination of local historic districts as well as National Register districts. As long as your property is a contributing resource to either type of historic district, it is very likely you will be eligible for the Maryland State Historic Tax Credit Program. So I do encourage you to review the Part 1 application process for the state tax credit. And we can work with you to confirm whether or not you're eligible and move forward if you ever want to plan a historic rehabilitation in the future. In addition to the Part 1 application form, which there's an example on the screen right now, you need to include a physical description, a statement of significance, a historic map if you have that available, and interior and exterior photographs of the property. Right now, we only have the ability to accept physical applications. So those exterior and interior photographs do need to be printed on glossy photo paper as well as labeled on the back. In the future, we do hope to have an electronic submission process, but for now we're still on paper. And in order to determine whether or not your property is located within a historic district or listed on the National Register, we at the Maryland Historical Trust have this great database called Medusa. You can, if Sheila is able to share these slides with you later, you can follow a link to it directly from this slide. It's very useful for Part 1 application information because if there is a National Register listing for your property or for the district you're located in, you'll be able to find a copy of that nomination form on our website. And it's also just helpful to confirm boundaries of National Register districts. It also may be helpful to use this resource in tandem with the Historic Districts and National Register sites map that you can get through the City of Rockville, which I've also linked here and may have explored a little bit this afternoon just to make sure this is an accurate statement. So both maps will be helpful for you to confirm whether or not your property is within a historic district, whether it's local or National Register. And it also can give you a map to share with your Part 1 application materials. So once you've figured out you want to submit a Part 1, or you've already submitted a Part 1 and now you're ready to have us review your work, that is when you will prepare a Part 2, the certification of proposed work. So the Part 2 application needs to be submitted and approved before you actually start your tax credit project in order for that project to be eligible for the state tax credit. The estimated expenses need to meet at least $5,000. And we are looking for you to describe all of the work that you are planning as part of your tax credit project. All of that work needs to conform to the Secretary standards. All of that work needs to be reviewed and approved by MHT before you start. And it needs to be included on this application form. In addition to the application form itself, there are areas for you to describe the proposed work you're planning on doing. We want you to show photographs of the entire structure, both the interior and the exterior, even areas where no work is going to be planned. If you have product specifications, drawings, or plans, or any estimates or proposals from contractors that you want to include, you are more than welcome to include them. Depending on the scope of work or the level of work, we may request them if you don't submit them right away, but we can work on a case-by-case basis as to when that is required versus just very detailed descriptions of work, which is the most important thing that you need to include in the Part 2. This is what the second page of the Part 2 application looks like, and we give you space to describe the current condition of a feature or element and also outline the work you're planning on doing to those features or elements. Once we review the work and make a determination in our office, we will let you know when that work is approved, so you'll be able to begin work as soon as you hear from us. Like I said, we do only accept applications in physical form right now, so in addition to mailing you the signed application form, we'll also send you an email that day, just so mail doesn't delay you on both ends of your application. Oftentimes there are conditions of approval that we put on an application, and those typically provide suggestions and recommendations on best practices for how the work should be performed to make sure it meets the standards. If you are repointing or repainting, we sometimes will give you a condition of approval to make sure you're using the proper and appropriate materials. If there's something that you've given us a description on that we need a little bit more detail or information on before we're comfortable approving that specific work item, we may request additional product specifications. But since it's a condition of approval, it would not delay you from starting other work items. We also have an amendment form available for you to fill out at any time throughout the course of your application process or your project period. An amendment form is an application form we use for you to be able to submit revisions or additional work items throughout the course of your project. If you are submitting an additional work item on an amendment form that must be reviewed and approved prior to starting that specific element, but it wouldn't delay you from continuing to work on items that have already been approved. Similar to the Part 2 application, we do request that all work that is new to the project be written down and described on an amendment form. And that work must also meet the standards because the project as a whole does need to meet those standards. Depending on the type of work item you're adding with this amendment, we may ask you to include additional photos, additional drawings, or if you have a contractor's proposal to include, we can review that as well. So in this hypothetical walkthrough of the application project process, you've submitted your Part 1 and your Part 2, and we're reviewing all of the work that you want to do to your property. This is a list of eligible expense examples that we can consider as part of the tax credit project process. What I've seen a lot lately is roof replacements, repairs, window, door, and restoration, storm doors and windows, repointing and structural work, as well as HVAC climate control systems. But this is just a list of examples. If you have anything specific you'd like to ask me about, feel free to email me and we can work that out one-on-one for specific work items that you may not see on this list. There are also examples of ineligible expenses that we still need to review as part of your overall tax credit project, but expenses for these specific types of items cannot be considered capital expenses for purposes of the tax credit. So for example, if you are proposing a rehabilitation project of your historic home, and at the same time you are going to be building a new compatible addition, let's say to the rear of your structure, the costs associated with that new addition are considered new construction, and therefore those specific expenses cannot be counted towards the tax credit. But since it is going to be undertaken at the same time as approved projects and as eligible expenses, they still need to meet the standards. So for new additions specifically, that means it would just need to be designed and constructed in a way that's compatible yet differentiated from the original structure. So these are a list of ineligible expenses, but would still need to meet the standards in order for your overall project to receive a tax credit for eligible expenses like what I listed on the previous screen. Another thing that comes up a lot in reviewing proposed work is the repair versus replacement discussion. To meet the standards, and specifically standard number 6, deteriorated elements must be repaired rather than replaced wherever possible. This comes up a lot in like exterior materials that may look a little worse for the wear on the outside, but could probably still be repaired rather than replaced. We try to retain as much of the historic fabric and features and materials as possible because those materials are usually of a more superior quality than modern building materials. And because this is a very big driving force of the standards, we always will encourage you to try to repair damaged elements rather than replace them. If an element is truly damaged beyond repair, it may be replaced in kind, but we will want you to clearly document that element or feature is beyond repair. If replacement is a warranted outcome, alternative synthetic materials like vinyls or composites are typically not an appropriate replacement material, but could be considered on new construction or new addition elements of overall projects. Once you've come to the end of your tax credit project and your overall rehabilitation is complete, that is when you will come back to Part 3 of the application to certify your completed work. Part 3 applications must be submitted by the end of the second year after work has been completed. And it is going to be submitted and claimed for the tax year in which the project is complete. So we're in 2022 right now. If you finish a tax credit project anytime within the calendar year of 2022, you will ideally submit your certified Part 3 and a special tax form I'll get to later with your 2022 taxes and then receive your state income tax credit for 2022, which is when you completed the project. In addition to the Part 3 application form, you will need to include photographs showing the completed work and documenting unchanged conditions of areas where no work was undertaken. So just like in the Part 2, we require photographs of the entire house inside and out, even if work isn't done in certain places. We ask for the same set of photos of the entire house with the Part 3. We'll also ask you to fill out an itemized expense spreadsheet and provide copies of invoices and certified proofs of payments. Since we are working with tax documents and money, we just want you to be as well documented as possible. So this is an example of what the itemized expense spreadsheet looks like. This is what you'll be able to fill out and submit with your Part 3 application form. You'll also need to include invoices or receipts to show goods purchased or services or works rendered. In addition to having all of those payments listed out on this spreadsheet, you will need to include a certified proof of payment for each payment. That could be a dated credit card receipt, a canceled check showing the front and back of a deposited check, a bank statement showing the check number or payment element, or a signed statement from the contractor, but those are only going to be acceptable for cash payments. Once you receive the certified Part 3 back to you with our signature on it, in filling out your actual state income tax credit, filling out your state income taxes for the year in which you complete your project, you will also submit this form, which is Maryland Tax Form 502S. It's my understanding that you will submit the certified Part 3 application and this tax form with your state income tax materials for the tax year you finish your project, and the tax credit will then be issued to you in the form of a check from the comptroller. If you have specific questions about how you're actually going to claim that credit once the project is complete and once we certify the Part 3, those would need to be directed towards the comptroller, because they're the ones actually giving you the check. We're just making sure the work is done according to the Secretary's standards. We do have a credit recapture element, which I don't like to spend too much time on because I want to help you focus on making sure your project is done according to the standards and according to our rules and regulations. But in the event work is performed on a property that received a tax credit, within 5 years of receiving that tax credit, that is considered disqualifying work, or work that doesn't meet the standards, or work that's going to detrimentally impact the historic character of the home. A portion of the tax credit may need to be recaptured. So the chart on this screen tells you the year out from the project being completed and the recapture amount we would need to take back from you. It doesn't happen often. I hope it never happens, but I just want to put that out there as a caveat, so we won't spend too much time on that. But I do want to spend a lot of time on this slide, which is the key takeaways of the tax credit process, of the application process, and pretty much just tips and tricks for preparing a successful application for streamlined review and making sure your project can be successful. The Part 1 and Part 2 applications may be submitted together with one set of photos. Usually that makes it a streamlined review because we're reviewing whether or not your property is eligible for the program and whether or not your work is eligible for the program and appropriate at the same time. All work must be reviewed and approved prior to beginning work to be eligible for the tax credit. All work needs to meet the Secretary's standards, whether the associated costs are eligible or ineligible. Undertaking inappropriate or unapproved work could jeopardize your ability to claim the tax credit at the end of your project, which is why we strongly encourage you to wait to get approval before you start. State tax credit review is independent from city or county review. So if you also were interested in applying for a city or county tax credit, it's a separate review process. So even if you're giving us the same application with the same information, you'll have to hear from me as well as the county. But if you have any questions about an upcoming project or application or anything specific, there's no such thing as a stupid question because this is a very complicated process. So I do encourage you to ask us. That's what we're here for, and it's our job to help you. So we're happy to do so. And this is just my ending slide with my contact information. I'm always available by email or phone if I'm in the office. I know that I've seen a couple of you asking questions now, which is great, but I think we'll be able to save those until the end. But I really appreciate your time and having me here tonight.
Well, thank you, Ms. Halbert. I'm going to go ahead and we're going to go on to our next speaker. I'd like to introduce Rebecca Ballo, and she's going to present on the Montgomery County Historic Preservation Tax Credit Program.
Thank you so much, Chris, and good evening, everybody. Just give me a moment. Let me share out my screen. Make sure this works. Okay. All right, I'm hoping you all can see my screen okay. All right, so good evening. Thank you for the introduction. Again, my name is Rebecca Ballo, and I am the Historic Preservation Supervisor with the Montgomery County Planning Department. Chris, can you confirm for me that you all can see the PowerPoint slide that I've got up?
Everything is good.
Okay, great, thank you. So my office within the planning department, we manage the county's historic preservation tax credit program for the county's designated historic sites and districts. So we have to date 25 historic districts that we manage from the town of Brookville, Clarksburg, Hightstown, Chevy Chase, town of Kensington, Garrett Park, city of Tacoma Park, and on and on. A complete list is available on our website. And we also manage the historic preservation review process for about 400 individually designated historic sites. So my office does not manage the tax credit program for the city of Rockville or for the city of Gaithersburg, though we all use the same law. The same county law applies to the review of the tax credits within each of our jurisdictions. So my email and phone number are available here. Michael Kine is our tax credit program manager for the county, and his contact information is also available on our main website. So what is the Montgomery County Historic Preservation Tax Credit? It is a 25% tax credit for documented expenses for exterior maintenance, restoration, or preservation work that exceeds $1,000. So you just heard from Dana at the state that they review interior work. We at the county level do not review or credit interior work at all. And the credit is applied against your county property taxes. So each of us in the local office with our respective historic preservation commissions, the HP staff review the tax credit application. We forward them to our historic preservation commissions who recommend approval, and then we send the complete package of information to the county's Department of Finance. And similar to the state credit with the comptroller, it is the Department of Finance that ultimately applies the credit against your county property taxes. So eligibility requirements, again, the work must be exterior in nature only. Interior work is not eligible. Work must be performed by a Maryland licensed contractor, and work must be certified by your relevant historic preservation commission, whether that's with the Montgomery County HPC or with the city of Rockville's HPC or with the city of Gaithersburg. And it is only for certified expenses for contributing restoration or preservation work on sites or districts that are listed to our master plan for historic preservation. We have another category of properties within Montgomery County that are called locational atlas sites and districts. Those are not designated, however, on the county's master plan for historic preservation. And there's a distinction between those two under the law, which if anybody has questions about how your property is designated, please feel free to get in touch with me separately. Our county's GIS, which is mcatlas.org, you can look up the different categories of properties to see how yours is classified. Also, work that requires a historic area work permit, it must have received approval from the Historic Preservation Commission. So for example, if you were to replace your roof materials with something that would be, you know, a qualifying rehab expense, but you didn't receive a historic area work permit for it, even though, you know, the HPC likely would have approved the historic area work permit. If you don't have evidence of the permit in hand, then we cannot process your tax credit. Ordinary maintenance, you know, work that doesn't need a historic area work permit, that would include typically painting, like painting of already painted, you know, wood siding, trim, you know, wood exterior elements, that does not need a historic area work permit. As an example of ordinary maintenance expenses must exceed $1,000 to be eligible. Again, so what's allowed? So these are just examples of eligible projects. It's not limited to these categories. And if you have questions, I encourage you to reach out to us directly. So as I said, exterior painting, window rehabilitation, roof repairs, or in-kind replacement. So for example, if you have an asphalt shingle roof on your non-contributing house and you put on a new asphalt shingle roof, that qualifies for the tax credit in Montgomery County. Repairing architectural trim or ornamentation, repairing contributing outbuildings. So we have garages here. We get a lot of tax credits for garages in Tacoma Park and Chevy Chase. However, other outbuildings, you know, barns, smokehouses, you know, other buildings that are more common out in the ag reserve, any repairs to those buildings will also qualify for the tax credit. Original siding rehab, repointing your brick or stone foundations or chimneys, and then any other professional services such as design, you know, paying for design fees and structural reports. So it's not allowed. Again, these are just examples. This isn't limited, and we field questions all the time from folks trying to figure this out. New construction or new additions are not eligible for the tax credit. Repaving of driveways, not eligible. That really falls under site work, and site work is typically not eligible. So as I said before, also work requiring an approved historic area work permit that was completed without the approval of the HPC, that's ineligible. Interior work. Value of labor, again, unless it's been performed by a licensed contractor. So the value of your own labor, unless you are also a contractor, you are not permitted to claim that for the tax credit. Landscaping, repairing mechanical equipment, or tools and equipment purchases. So for example, you were your contractor needs to buy a jigsaw or something, or, you know, a hammer to do the work that you're claiming the credit for, because you can also use that tool for, you know, a variety of other jobs or purposes. That is, you cannot claim that under the tax credit. So our application requirements, it's just one application. We need the complete application form and receipts on the transmittal form. That's where we ask you to itemize all of your expenses and to detail, you know, which of your expenses you are claiming. For example, an invoice from your contractor that may have $5,000. Maybe he did interior work and maybe he did exterior work. We ask you to itemize that for us. It helps the review go faster. Provide a description of the work that was done. You know, again, a general property description. You know, what were the rehab maintenance problems you were trying to solve at the site? And then the proof of payment, your itemized receipts that are clearly marked and separated from any non-eligible expenses if you are able to do so. We go through all of the invoices ourselves, but it does aid in the review. And then before and after photos of all of the work, again, clearly labeled. Our applications are available online. The county's tax credit application can be filled out and submitted electronically. We do prefer the electronic submissions. However, paper applications are still accepted at our office in Wheaton, and the applications are available on our website. So the timing for the county's tax credit is also very different from the state's. The credit is applied to county property taxes the year after the work is completed. And I'll go through and give an example, but basically right now we are finishing up the review of all projects that were completed in calendar year 2021. And that's what we're doing now in 2022. So applications are due to your respective historic preservation office on April 1st, following the year in which the work was completed. So again, we accepted applications up until April 1st, 2022 for all the projects completed in calendar year 2021. We review the applications during the spring and summer of the calendar year. And then the approved tax credits are applied to tax bills that are issued to property owners later in the year. Unused portions of the tax credit can be carried over for up to 5 years. So if you qualify for a credit of, let's say $100,000 and that exceeds your tax liability, it will keep being applied to your account for up to 5 years. We've received, like, year over year, the number of tax credits continues to increase. This year, we broke another record for our tax credits. We received 158 applications, and in any given year, the dollar amount, it varies. We've had some really large projects at National Park Seminary, but in any given year, we can process between $4 million and $7 million in eligible rehab expenses. So I'd like to go through a quick example. So an owner of a county designated historic property completes a painting project in October of 2020. That owner submits a complete tax credit application by the deadline of April 1st, following year. Staff reviews the application and recommends approval of all eligible expenses. We then present that to the Historic Preservation Commission. We tend to bring it through to them in batches of about 20 to 30 projects per meeting. If the HPC agrees with the staff's recommendations after reviewing the project, they take a vote to allow us to forward that to the Department of Finance at the conclusion of the entire review period. And then it is the Department of Finance that will adjust the applicant's property taxes to account for the 25%, what we have determined to be eligible expenses in accordance with the HPC's decision. As I said, any unused portion is carried forward for up to 5 years. So everything that I have just gone through, including a video of a similar tax credit workshop that we completed last year, is available on our website. We also have our staff contact information there, and we are happy to get into questions about anybody's specific project or specific property. A lot of time we get questions about is waterproofing a basement or installing a French drain or other things to deal with water on site. If some of the work is interior and some of it is exterior, how would we review that for the tax credit? The truth is we review those on a case-by-case basis because often that work is required for the ongoing maintenance of the structure. But each property and its circumstances are unique. So, we deal with everybody on a case-by-case basis, and we love answering people's questions about their properties because we want to make sure that you get the tax credit that you are eligible for being a steward of Montgomery County's historic resources. And that concludes my portion of the presentation. I'm happy to answer any questions.
Thank you, Ms. Ballo. We do have several questions that have shown up in the question and answer portion. So first question that came up is, what is an opportunity zone?
I would hope to have a better answer for that because it does come up a lot. Opportunity zones are districts throughout the state of Maryland that the Department of Housing and Community Development designates. So you can find interactive maps by county to determine whether or not your property is located within one. In order for that to really matter, it needs your property needs to be eligible for either a state small commercial or a state competitive commercial tax credit. In the event you are a commercial tax credit applicant and are within an opportunity zone, in providing proof of your location through a DHCD map, you can provide additional documentation and project information for us to be entitled to either an additional 5% or 7.5% tax credit at the end of your project. But that's something you would need to document at the onset when you submit Part 1 and Part 2.
Thank you. We do have a second question. It was answered in the chat, but would like to repeat it to give our panelists an opportunity to respond. Do any of the tax credits apply to the townhomes in Newmark Commons? And that is a National Register listed historic district.
Yeah, so if you are within a National Register historic district, you are eligible for the state historic tax credit. I know for the county level, and Rebecca, please shake your hands if I'm wrong. You may not be eligible just by being within a National Register district. You need to be in a local district. But for the state tax credit, being in Newmark Commons or another district or property that's only listed on the National Register means you can be eligible for the state tax credit.
Thank you. We have a third question, and Ms. Bashiri, this one would be directed towards you. One of our attendees stated that they got a letter in the mail inviting me to attend this webinar. Does that mean my property is eligible for a historic preservation tax credit?
Yes, we actually sent letters to everyone that is in a designated historic district, and also to everyone who is listed in the Rockville Historic Buildings Catalog. And we sent those to the people that have properties in that catalog because they were deemed as eligible when they were put into that catalog. They weren't designated, but they were deemed as eligible for designation. So if someone that's in the catalog that's not designated and they're interested in the historic tax credits, they could go through the process of getting their building designated or the property so that they could take advantage of the county tax credits and the state tax credits.
Thank you. Our next question, I believe it's in a couple parts. The first portion, the attendee is asking, does replacing the roof on a residential home, because it's old, qualify for the credit if our home is within a National Register district?
Yes, for the state tax credit, if you are located in a National Register district and want to replace your roof, that is a project that could be eligible for the tax credit. So Part 1, yes.
Then they asked a follow-up question saying, if so, how do we know the replacement itself qualifies? And then they state that they have already have this project scheduled, but it has not yet taken place.
Okay, so to address the other parts of that question, typically for a roof replacement, an in-kind replacement would be eligible for the tax credit because that's going to be replacing your roof with the material that's already there. In the event your current roofing material is not the original roofing material, you may also be able to replace the roof to go back to that original roofing material. There is sometimes a little bit of leeway in replacement material if you would like to go back to the appearance of the original roofing material, but use a different material that's going to be an accurate replication. But if you want to email me tonight, I can get back to you later this week about maybe the specific material you have on your roof now and what you are looking to install when you replace it. As far as timing is concerned, for the state tax credit, our review time is roughly 30 days. So within 30 days of you submitting an application, we'll be able to notify you whether your project is approved and can start moving forward. So if you already have the work scheduled, I would encourage you to submit an application as soon as you can, just so we can get the process going. With that in mind, like I mentioned in in my presentation, all work needs to be approved before it is undertaken in order to be eligible for the tax credit. The one exception to that is if you need to put a down payment or a deposit down in order to schedule a contractor or to get your work on somebody's schedule. That type of payment can be paid prior to approval of your project, but the actual work cannot start before your project is approved in order for that deposit and the work costs to be eligible for the tax credit once it is completed. And that's a little bit, I think, different as far as timing is concerned between the state tax credit and a local county tax credit. But just thought I'd spell out your state process. So if that attendee wants to reach out to me about specifics, we can go into details about it.
We do have two questions, and we may want to differentiate them for each of the programs. The first question, where can one find more details about eligible costs and expenses?
So I think I'll just jump in. Depending on the type of resource and the project, I would say just reach out to us directly. The county, the portion of the county code that details the county's tax credits, it's section 52, article 4 of the county code, and that's available on ComCore. It is a very opaque document. Just reading the tax code is not a great deal of help. So I would just say, you know, reach out to us directly. We are a resource, you know, for all property owners. Even if your property, you know, we find you don't qualify for the tax credit, we often have information about contractors or, you know, other resources that may be helpful.
Yeah, I would second Rebecca's comment of you can ask us whether or not something is eligible or not. We do have lists of eligible versus ineligible work items on our website, just on our tax credit page, also on our application instruction document. We also have an FAQ document that may list out some more specific examples than what we have on our website, but you can ask us and we'll be happy to let you know what could or could not count.
Then here would be a sister question to that. How long does the approval process take for each program?
Well, for us in Montgomery County, and I won't speak for Sheila in the city of Rockville, again, we've received a record number of applications every year. So we typically do not finish the review process until late fall. And there's a rush of applications that come in the spring that need to be logged. So it can take us the entire calendar year, to be frank, to move through all of the applications. I don't know how much better the city of Rockville is at getting through them. And then the state has mandatory timelines.
Not much better. We just finished our tax credits for 2021, and I have not emailed them to you, but they've been approved, and they're, you know, we have to bundle them up and email them to you. They were so large, it's probably going to come in 2 or 3 sets because of 600 and something pages. But usually what we would try to do is we start getting them in April, and we start taking 3 or 4 at a time to the HDC in May, June, July. Depending on how many we get, and then we bundle them all up and send them to you hopefully in September or October. This year we just did them all in one meeting, which was our last meeting, and so they'll be ready for you. Prior to that, during the pandemic, and I was off, so they did not get done in a timely manner, but now they're all caught up.
Excellent. Thank you.
Oh, sorry, Christopher. So for the state, we review applications as they come in on a rolling basis. So there's no deadline for when you need to submit an application, but once you do, we will probably be able to review it and give you a determination within 30 to 45 days. So for part 1 and part 2, when you're planning when you want to start your project, maybe bump out 1 or 2 months just to make sure you get our approval first. And then for once your project is complete and you're submitting the part 3, We do encourage applicants to submit them by the end of the calendar year if you want to be able to submit them on time with your taxes, because we do get an influx of Part 3s around tax season. So beat that rush.
Then we had another question relative to timeline. The question is the property tax credit for work done in 2021 applied to the 2022 property tax bill prior to September 30th?
For our purposes in Montgomery County, again, I don't know if the city of Rockville or Gaithersburg can do it more quickly. No, we are, I cannot recall a year that we were able to transmit everything to the Department of Finance to have it applied to the September tax bill. Most of the time we are able to transmit to have it applied to the final tax bill. However, there have also been years where the Department of Finance needs to retroactively send a check. That's not the usual procedure where they need to send a check, but sometimes the December bill is come and gone, and then they will send folks a check directly.
And it's also not likely that ours will get to them in time for it to apply to the September 30th. Basically, what has happened just recently, in fact, I got 3 years worth of tax credits that totally paid my 2022 tax credits. I mean, property tax. So it did add up. But generally, this one will come after September 30th because we haven't mailed it, and I'm sure that they're going to take a while before they can get to it to process it.
Thank you. We do have another question that says from one of the attendees that they received materials in the mail stating that the County Historic District credit might be available if interior repairs were to preserve the home's structure. Is this true?
Typically, no. Again, typically that is not the case. There have been instances on a case-by-case basis. I'm thinking of a stone house, for example, where the foundation wall is also the exterior wall as it carries all the way up, and there are cracks and water infiltration, coming from the exterior all the way through. So the repointing and the masonry work for that element is an interior and an exterior piece of the structure that is required to be rehabilitated for the entirety of the structure. And in that case, the HPC has saw fit to recommend the approval as it was. They considered it an exterior element, but typically no, that is not the case, and it hews very closely to the language of the tax law that we cannot circumvent. So that's kind of the legalistic answer. What I would always say again is reach out to us and talk to us about your specific property, and we'll be happy to walk you through it and see what's eligible and not eligible.
Excellent, thank you. And we're coming to our last question. So if any attendee has a question, please place them in the Q&A so we could answer any of your questions before we end tonight. But the question that I currently have is the last one. Does the HOA Clubhouse at Newmark Commons qualify for a tax credit? The attendee wanted to point out that this building does generate a small income through rental fees.
That is a great question, and the explanation actually helps me with my answer. The HOA Clubhouse or any common areas of condominium buildings can be eligible for the small commercial tax credit through the state. So unfortunately, that program does not have funding available right now, but starting on July 1st of 2023, there will be funding available. We'll be able to accept new applications by then. So if you represent or are on the board of a homeowners association, of a condo or a neighborhood that has buildings basically owned and operated by the community, that kind of runs on fees or runs on some type of income, those are going to be candidates for the small commercial tax credit.
Well, thank you. Was wondering before we prepare to adjourn, does anybody else have any questions for our panelists and presenters this evening? Not seeing any additional questions pop in.
I just wanted to make a statement. For those that live in Rockville, I send out a letter, paper letter, in January, end of January, beginning of February, to notify people to start getting their tax credit applications together for the previous year. So I send out an application, I send out a letter explaining the tax credits. And I also send out a form showing what's eligible and what's not eligible, just to kind of help them out. And I'm always available for any questions.
Well, thank
I'll
you, Ms.
piggyback on, oh, I'm sorry, Chris. I'll piggyback on what Sheila says, to say at the county, we also send out a little postcard reminder also in January, so we don't get all caught up in your holiday greeting cards and magazines and all of that. But we also send a reminder to all of the property owners within our historic districts and for our historic sites to remind you that it is indeed tax credit season. We will also accept applications prior to January 1. The law just gives us the end point. We can't consider anything after April 1st, but I encourage people, if you know you're all done for the year and you finished a project in 2022 and our form is available on the website and you want to get a good jump on things and submit your tax credit application now and just get that out of the way, we will certainly take them earlier than January 1 if anybody's ready. We've received already, I think, 5 or 6 this year.
Oh, wow.
We did receive an additional request about posting emails for everyone. Was wondering if we can go through each of our panelists, and if you could type it in the chat and as well go ahead and vocalize it, that'd be greatly appreciated.
Sure, I'll say it first. My email address is also just my name. It's dana.halpert@maryland.gov. I'll type it out, but my last name is just like Jim from The Office, which is a fun new trick I get to throw out. So looking forward to hearing from all of you.
So for mine, I'm trying to just pop it. Let me see. Mine is also my name, rebecca.ballo@montgomeryplanning.org. There's an H at the end of my first name. And it's also available again in the PowerPoint presentation.
And mine is S Bashiri, that's B as in boy, ASHIRI @rockvillemd.gov.
Sheila, get that posted. But we do appreciate everyone's time this evening. I'd like to thank our 3 presenters. And on behalf of the City of Rockville, thank you everybody for attending. Do remember that this will be posted online, and do reach out to any of our presenters with questions that you may have. So thank you again for this evening. Have a good night now.
Thank you, everyone.
Thank you, everyone.
And thank you to our presenters. I appreciate you coming.
Thank you for organizing. It was a pleasure. Good night.
Okay, good night.